DSCR loans and how you can get the advantage for investment properties. Hey everybody, my name is Rich Hanlon and this is Mortgage Ballers, and I appreciate you listening to the videos that we put out. If you haven't subscribed yet, make sure you subscribe, make sure you comment. Love to hear your thoughts on these things. Maybe put down in the comments if you have an investment property. I'd love to find out just how many people are taking advantage of the current market. Certain areas are pulling back, but the DSCR loan, debt service credit ratio, has been a game changer for me in my loan officer career. I've been doing this 35 years, but what I have found over the years, many of my clients are now older, like me. Hey, look at that. And they're getting into investment properties. I have a couple clients that have over 100 doors. What does that even mean? 100 doors. So a fourplex would have 4 doors. A single family would have 1 door. Duplex, 2 doors. Triplex, 3 doors, right? Clarifying that, because sometimes investors talk in doors, not in properties. And really, this is a conversation for 1 to 4 residential units. I'm not talking about commercial stuff that's 5 units or more, even if it's residential. But this has been a game changer for me, especially being licensed in 44 states. I have investors in California, and California is expensive. I mean, you're going to pay $500,000 for just a very average house. How about a 30-year home that's 1,000 square feet, Roseville, California, Rockland, California, Lincoln, California? You're going to pay $500,000. That's a lot of money. I mean, you have to put almost 50% down just to break even on the rent. So on 500,000, you have to come up 250,000. What I've learned over the last couple of years, since 2022, as the rates have risen, my investors, man, they are smart. They're just really smart, and they have taught me a lot. Most of my seasoned investors, they don't care what the rate is at any given time. What they care is, does the rent, after you take into account the down payment, accomplish what they need as far as a break even and or profit? Right now in California, that's kind of hard to do, but many of them will do 2, 3, and 4 unit properties because it's a little easier to get there, but a lot harder to get those kind of properties. Typically, in California, they hit the market and they're gone. Investors snatch them up very quickly. And that's probably true of most markets. But what I have found, when I contact my investors, I will take properties here in Georgia, and I will send them those properties and say, hey, check out this property. The estimated rent is $2,000 a month on a $225 purchase price. On top of it, they don't say, hey, what's the rate? They wait for me to say, this is going to be a DSCR loan. We're going to make it simple. I don't need your tax returns. We're going to keep it simple and easy. As long as the rent on the property will cover the payment on the property, PITI, and if there is an HOA or if there is flood insurance, needs to cover all that. As long as we have the right ratio of usually a 1-to-1 or better, that's a done deal. We don't need to go to 40% or 50% down like he does in California. Sometimes my investors can get 2 properties. So I reverse market properties. I find properties in areas. Hey, Alabama's right down the street from me. Tennessee's right on the other side. We've got Georgia. We got Mississippi. We got Florida. We got North Carolina, South Carolina. Everything's a quick drive, and there's some incredible markets with value that you can get properties. Some of these properties are brand new or less than 2 years old. Think about D.R. Horton, popular name. Well, guess what? D.R. Horton builds the same homes in Georgia as they do in California. So imagine getting a brand new home for DR Horton at 230, and you show your investor that that same property in Rockland, California, Roseville, California, Sacramento, California is 550. But that house in California is 2,800, 3,200 in rent for that 500 to 550 property, but I can get 2,200 for the $230,000 property here in Georgia. That's what I'm talking about. The value ratio is crazy in some of these states. And so that has changed my life as an investor. And the DSCR loan has been the key. I hate giving my tax returns. Having multiple companies, being commissioned, the ups and the downs, my tax returns are huge. And then if they want corporate returns, my corporate returns are 1,400 pages for federal. Like, are you serious? I'm not wanting to give that. And I'm only a 30% owner, and I still have to give those, right? I want simplicity. My investors want simplicity. You know who doesn't want simplicity? Is the first time investor. They want to get the Fannie Mae, Freddie Mac. I want to put 20% down. I want to get that lowest rate because I got to get the most return. And realistically, I try not to deal with those anymore. I kind of pass those off because they stress me out to deal with people. They want every dollar and they're barely going to qualify by the time we count for everything. It's investors are very chill. Seasoned investors that I deal with, some of them are quazillionaires and you wouldn't know it to talk to them. They're very down to earth. They trust me to get the loan done. They trust their realtor and say, how does the realtor work? If you're not doing a California loan, it's cool. Find a property. I give it to them. Their realtor will call over to the realtor here so they can get a referral fee. And then I will get the loan or loans because I'm selling a 2-to-1 ratio against my California market. And, it works out for everybody. A lot of value is out there. Having boots on the ground in some of these states is huge to be able to have these conversations. So people have been asking me and I've been talking about it. So I made the decision. I want to help more loan officers get more business. And so I'm going to be doing some series on the DSCR loan, how to reverse market it and things like that. Also, how to use it yourself to start getting into rental properties, investments, if you're not already. If you already have one, how to get that second, third, fourth, fifth property. And eventually we're going to lead into using the all-in-one at UWM, using a construction loan to build your own fourplexes so that you can walk into instant value, either to sell it and or to rent it out. But what I did is I want you to look at this real quick. The DSCR Advantage. And yes, what does it say? How to buy rental properties without showing your income. And guess who wrote it? Look at the bottom, Rich Hanlon. I put this together and I'm going to put a link down below. You're more than welcome to get it. It's a free ebook that I put together talking about the simplicity of the DSCR loan, the reasons, the whys, understanding why I lean towards it. If somebody comes to me and says they want to do investment property, I'm like, cool, let's do a DSCR, get it done right away. And they're like, no. I want to use conventional. I'm like, I'm not the person for that. I'm doing you a disrespectful service. I don't care what the rate is. My goal is to get you in the property and I'm an investor. I deal with investors all the time, and to start getting people to start thinking like investors. Burn and turn. Stop playing games. Stop trying to get Fannie Mae so you can save 0.3%, maybe 0.5%, because you're not going to keep that loan, 6 months, a year, and then the rate's going to drop. You're going to refi it anyways. Stop trying to tell me that you want me to fight for a month with all the ups and downs to get you to barely qualify so you can save 0.5% in rate. when you're going to refinance it anyways. And I'll be honest with you, I use this same platform when I go to, help people get in their primary residences. I've had to get to the point where I tell them, stop worrying about the rate. You're not even going to keep this loan for 30 years. Odds are you're going to refinance it within 7, and realistically in this current market, you'll probably refinance it in the next 12 months. That's just a fact. So let's use the probability to our advantage, and let's get the properties. Florida, Texas, properties are getting very interesting. Value. And we're going to talk about where to find that value and how I approach that value by getting around bases, Air Force bases, Army bases, right? Naval bases. Here in the United States, understanding that when people live off base, they get stipends and they have to pay their rent. Otherwise, they get in trouble. So there are advantages that you can do while giving back to those who serve us. We can be serving them. Just like people that like to buy around major colleges, there's all these different methodologies versus I don't want to just buy a property out in the middle of nowhere. There has to be a rhyme and a reason for value, and there's incredible value out there. So I'm going to put the link in the description. I'd love for you to check out this and tell me what you think. I put some time into it, and it'll make more sense as we start to go through some of these shorter videos when we talk about the DSCR loan, the DSCR Advantage, how I use it as a loan officer and how I use it personally on my own properties for rentals, and how you can do multiple things. You're in a commissioned business. It's time that you start using your tools. By the way, the DSCR is a tool. People are like, it's a loan. No, loans are tools to help you achieve your desired goal. And today, the DSCR is my hammer, right? It's going to help me build that next portfolio. And we're going to talk about how people are doing it. Why is it that we will do loans for people over and over and over and over? I have one loan officer. She's done probably 50 loans for an investor. And the investor finally asked her, said, how come you're not doing the same thing that you do for me? I mean, she makes good money. And guess what? She's like, I never thought about it. Do you think about it? Do you think about building your own portfolio? You know who your best customer is? Yourself. Real estate agents, do you know who your best customer is? Yourself. Did you know you can refinance your own properties in certain states as a loan officer and get paid a commission? Not all states, but some states. There are very friendly states to that kind of stuff. California is one of them. I want you to start thinking outside the box. Why is it that we try and shove everything into a Fannie Freddie format so that we can try and get a little better rate? We got people committing fraud, trying to save 0.5%, and it's not worth it. You're going to refinance it anyways. You don't save enough money per month by the time you think of 6 months to a year. Why would you do that? Get the property. Value is in the property, not in the loan. If the numbers work based on the value you can get the property for, you just hit a home run. So welcome. We are going to be talking about how to use the DSCR loan, the advantage of a DSCR loan, in order to hit home runs. And we'll talk about this later, but if you do this, put in the comments, how many rental properties would it take for you to change the trajectory of your family and or your clients? And guess what? When you do investment properties, you speak a different language. You are trusted differently in circles when you are also a participant. It's hard to give advice to people when you don't even have skin in the game, right? Let me give advice to people how to be homeowners, and I've never owned. Let me give advice to people how to have rental properties, and I've never had a rental property. Sure, I guess you could do it, but until you've got skin in the game, it's a different conversation. My investors, well, I didn't do a lot of investment business. Now that's pretty much all I do. And these people, that is their full-time job, is investments. and they buy all over the United States now that I'm licensed. Man, there's no limitations to what's available. So thinking outside the box, allowing yourself to open up to some different ideas of how to get business. This is probably going to be one of the biggest game changers for you and your realtors if you use it right. All right, my name is Rich Hanlon. This is Mortgage Ballers. I'm going to put the link down below. I'd love for you to get a free copy of it, read through it, so that as we start to have some follow-up here, we can actually have some conversations. And if you have questions about the DSCR loan, and this is more for loan officers, put your name in there. I want you to understand. And what's going to happen when you put your name in, it's going to send you every other day an advantage, the pros and cons, the ins and outs of the DSCR loan product. And I have personally written every single one of those. I'm not trying to sell you anything. I am trying to help mortgage brokers, loan officers get through this crazy market and to expand beyond belief by just re-educating and retooling your toolbox with some of the most incredible products on the market. All right, I'm signing off. This is Rich Hanlon. And like we always say with Mortgage Ballers when we've had a good time, stay thirsty, my friends.